well, let's move on. Bad news continues for the tractor industry. Weather forecaster SkyMet last evening warned of a below normal monsoon, rules out the possibility of excess or above normal monsoon rains in 2019. This comes after Escorts scaled down their guidance on the back of disappointing festive season sales. Shenu Agarwal, who is the CEO of Agri Machinery of Escorts, joins us now to talk about that. Mr. Agarwal, thanks so much for joining us on the show. First, I want to talk about your own expectations. In FY20, what kind of a growth do you see in the industry and how will Escorts perform?
Yeah, so first let me talk about little about the monsoon. We are all worried about the latest forecasts that have come from SkyMet. Of course, we are yet to see the forecast from IMD, but we have a certain view on this, and I would like to say a few things on that. See, first thing, if you look at the food inflation of the last few years, at least last 5 years, so the food inflation has been very, very reasonable, around 4% levels, right? So which tells us that the supply and demand situation on food is actually getting better and better in India, and therefore the vulnerability on the monsoons is getting reduced quite a bit. The second thing is the forecast really says that the monsoon in later part of July, August and September would be actually pretty close to normal, and therefore I don't think there would be a huge adverse impact on the production of Kharif season because there may be some delay in sowing. Farmers, instead of sowing in June, may sow in early July or late July, and therefore the harvest will come late. So there would be a shift of the production season, but I don't think it would be a kind of major impact. I saw some statement from Ministry of Agriculture also yesterday saying that production may not be impacted actually.
Okay.
So that is firstly my take on the monsoon situation. Secondly, on the growth, definitely the industry has come down from the previous levels. We had a fantastic run for last couple of years. In 16-17 we had close to 18% growth, and then 17-18 we had about 25-26% growth. Now we were sitting on a pretty high peak, and therefore it was expected that the growth might come down, right? But as far as Escorts is concerned, we are, of course, I'm not saying that industry does not affect us, but our opportunity size is actually what we are focused on. And I must say that the opportunity size for Escorts is actually the highest in the industry so far. We are fortunately a two-brand company, and we are not covered all over India. We are not as strong in South as we are in North and in many parts of India. And therefore, we are very, very focused on opportunity size.
Okay.
I mean, if you look at our recent performance, we have been beating industry for almost like 12 quarters,
exactly,
except for 1 or 2.
Exactly. Mr. Agarwal, good morning. That was my next question. You have gained market share almost every month over the last few months from M&M and from others. Is that trend likely to continue, and by how much?
Yeah, see, as I said, structurally we are actually better placed. Other competitors gained market share in a period where we were losing, but now we are focusing very much on our structural levers. As I said, the opportunity size for Escorts is probably the highest right now among all tractor players, because we have so many areas where we can grow. Whether it is geographically, whether it is south or west or even east. Even in our strong markets, there are a lot of opportunities for us in terms of both the brands, right? So I think we are very sure as an organization, we are very confident we are putting the right levers in place that will continue to be better than the industry, which we have also proven in last many quarters. And I really hope that we will continue to grow at least the double digit, irrespective of the industry.
Okay, so you hope to grow in double digits. You ended FY19 with almost a 20% growth. What about the industry? For FY20, are we looking at a single-digit growth year for the industry? And is there a possibility of even a negative growth year in FY21 if the monsoons don't pan out well this year?
No, I don't think there is any possibility right now of negative growth. irrespective of the monsoon situation. As I said, we are yet to receive another forecast from IMD. But I don't think, irrespective of the monsoon, it's going to be a negative growth. See, last year, FY19, the total growth was 8%, and I have a feeling that at least in the first 2 quarters of the year, we are going to have better growth than that at the industry level. And of course, then Escorts growth would be somewhat higher than the industry.
Mr. Agarwal, good morning, sir. Surabhi Upadhyay here, joining into the conversation. This lull patch that we are talking about, what you'd also guided for earlier, 3 to 5% perhaps growth in the fourth quarter. How long will the lull patch continue? Because now what we do know, or at least what the anticipation is, that we will have a slightly below normal monsoon. So given that forecast, how many quarters of sluggishness and single-digit growth ahead?
Yeah, so as I said, I don't think monsoon will have a very adverse effect in the first 2 quarters. I mean, there are reasons for that. The festive season actually is concentrated in the first half this year. So last year, if you see the Navaratras, these Chaitra Navaratras were in March, but this year we have those in April, right? So that will bring lot of buoyancy in the market. Also, the Diwali, the Dussehra season is actually preponed this year as compared to last. So again, you will see a lot of ramp up in deliveries to customers in the first half of the year. So I think the fundamental factors on the ground are all good. The crop prices are good. The production has been good for Kharif, for Rabi, and although there would be a delayed sowing possibly, if the monsoon gets delayed into August and September, but I don't think it will be adversely impacting. So as I said, I think in the first half at least, we should, even at the industry level, we should see better growth than what we had seen in the entire last year of 8%.
Is there a lot of, aggression in terms of pricing in the industry now? I mean, are you cutting prices or offering discount schemes? Are the others like Sonalika or Mahindra & Mahindra doing the same? We did get a chance to speak to M&M. They said they have not given out any major discounts or schemes, but they did indicate that there's a lot of undercutting happening with other players like Escorts and Sonalika. Your view on the same?
I think the competition intensity is pretty much the same as it was. See, we are a very traditional industry, right? And we are a very rural industry, right? I mean, even if you want to do discounts and put an advertisement in newspaper, how many people really get to look at those advertisements, right? So we are a very reach-oriented industry. We are a very relationship-oriented industry, and discounts really don't work very well in our industry, right? So I don't think anybody is actually undercutting prices. Of course, people come up with several programs during season, which is all right. Everybody does that, but I don't think there is any undercutting trend either with Escorts or with any other competitive players that we have seen in the market.
So just to follow up to that, how much market share have you gained over the last, say, 3 to 6 months from your peers? And what is the medium-term market share guidance that the company has laid out?
Okay, so for FY19, our market share is at 11.9, and in the previous year it was about 10.8. So we have gained about 1.1%, which is considered to be pretty good in tractor industry. We have been gaining market share almost every quarter. I think the last quarter of the year, which is Q4 of last fiscal, I think our market share growth has been closer to 2%. Right, so we have been steadfastly kind of moving, and as I said, it's just the opportunity size. It's just like the scope of growth for us is probably much better than anyone else, and we are just very focused on those opportunities.
Mr. Agarwal, just a quick final question from my side. What kind of capacity utilization levels would you be operating at right now?
So we produced about 99,000 tractors in the last fiscal. Our earlier capacity was only 80,000, and we have been working on enhancing our capacity. So currently we are gearing up to produce up to about 150,000 tractors in the same plants that we have, right? So we are putting up, adding some machines and some other things to enhance the capacity to 150,000. So very soon, I think we'll be ready with that. In several months of the last fiscal, we have produced more than 10,000 tractors already in a month.
So you're obviously extrapolating the current capacity. No plans for fresh capex, brownfield or greenfield?
No, greenfield, nothing right now, because we think once we enhance our capacity to 150,000, which will be very soon, I think we'll be all right for the next couple of years. And then basis our projections for future, then we may think of greenfield, but right now there has been no such decision yet.
Okay, so then a final question. How high are the inventory levels currently for the industry as well as for Escorts? And would you be looking to scale down your production in order to rationalize inventory?
No, actually, I don't know about the industry that much. I think industry is at a little bit on a higher side right now, but I can be wrong there. But in our case, as of 1st of March, I remember the figures. Our inventory levels was just about 22, 23 days, which I think is the best in the industry right now in terms of number of days of sales. Right? So we have been very, very focused on keeping a very lean inventory at our dealerships, and that is actually one reason that we have been able to gain a tremendous amount of dealer loyalty with our brand, because we have been keeping a very lean and lean inventory. So I think our inventory levels are the best in the industry right now.
Okay, Mr. Agarwal, thank you for joining us. That was quite an enriching conversation. Got a lot of data points there, and we hope you continue to speak with CNBC TV18. Well, that's the word coming in from Escorts. Importantly, they say that irrespective of which way the monsoons go, they don't expect a negative growth here for sure in FY20 and FY21. And the opportunity size is the highest for Escorts right now. We'll take a quick break on that note, but up next,